All right. Let's start. So if you did the mock exam, you would have seen that this is the question we used for final mock. We're going to do a very quick review of it. I'm not sure we can cover everything for the diet during the time we have, but then it also depends on how fast we are. I'll share my screen now. Okay. So the question requires us to, so some background is given. I'll read this with you and then give you time to read the case study, and we will give it a shot. So the company, I have provided you with some information which you should use to help you in planning the audit of Philco for the year ending 30th September 2005. So the year end is September 2005. As you know, Philco is a new audit client of our firm. I hope you are looking forward to working on this new interesting client, which is the first timber company we have secured as an audit client. You should also be aware that the management team is planning for Philco to achieve a stock market listing within the next 2 years. I require you to prepare briefing notes for my own use in which you evaluate the business risk to be considered, 10 marks. Evaluate audit risk to be considered in planning the audit, 20 marks. Note, in relation to the company's timber plantation asset, referred to in Exhibit 4, you are only required to consider audit risk relating to changes in fair value. Any other relevant audit risk relating to timber plantation asset will be dealt with separately later in planning stage of the audit. C. Design the audit procedures to be performed in relation to changes in fair value of timber plantation asset caused by recent storm. Your procedures should include those relating to the evaluation of the experts appointed by management and the work they have performed. And finally, using Exhibit 5, explain the ethical issues and other audit planning implications which arise in relation to the phone call from the company's chief finance officer. All right. So we're asked to bring out business risk and audit risk first, and then audit procedures, and finally ethical and professional issues. I'll give you 15 minutes thereabout to read the rest of the scenario, the exhibits that have been provided to us. Looks like there are 5 exhibits. From these exhibits, identify at least 5 business risks that you can see, and 6 audit risks that you can see. 5 business risks that you can see, 6 audit risks that you can see. Okay. And then when we come back, we will then uh, listen to each other, get the approach right, solve it, and move to the next part. Okay. So you can please start. Utilize your time efficiently.
Hello, good afternoon.
Yeah. Good
Please,
afternoon.
what question are we reading, please? I just came in.
It's on the group. It's on the group on the WhatsApp.
Okay.
All right, you should be done reading the scenario. So try putting down your business risk and audit risk list. Okay. Remember, 5 business risk, 6 audit risks. Sorry, I was talking to myself. Okay. So I was saying that I've now given 20 minutes and based on our plan, it should take about 15 minutes or less to read the question, right? Question one. So I expect that you should be done reading it and then additional 5 minutes to put together a list. So let's quickly go through the business risk. Tell me one business risk that you have identified and talk to me the way you will have discussed it in the exam hall. Okay, I need only 3 from 3 different people, and then I can we can list the other ones so that we can move on to the audit risk. So please, let's do it quickly so we don't waste time, okay?
Okay, can I go first?
Yes.
Oh, okay. I don't know where to start from, but let me start from redundancies. So, the business is currently facing shortage of labor, which means there's pressure on their production, and which means they are unable to maximize their business efficiency. And also, as a result of the
Wait, hold
labor
on, hold on, hold
strike.
on, hold on, hold on, hold
Okay.
on, hold on. What's the name of your business risk?
I think lost sales or delay in deliveries. Let me say delay in deliveries. Yes.
Okay, all right, go ahead.
Okay, so as a result of this, they are unable to meet their orders as and when they fall due, which results in lost sales and also reputational damage because the customers may not want to um, use them for the next batch of orders.
Okay, okay. So you're talking about the industrial action, right?
Yes, I am.
All right. Okay, that's fine. Thank you. What else? Another person?
I say
Hi.
30% of the timber is exported. That's my business risk. So
Okay.
PALCO is open. They are open to the risk of a different country's importation policy being unfavorable and or an unfavorable law which could adversely affect trade, and subsequently it will affect their cash flow, revenue, and liquidity.
Okay. Exposed to unfavorable law because they export. Okay. All right. What else? Another person?
So I want to talk about international expansion. So apart from the fact that Farland and Pelco, the country are both using the same exchange rate, there are other factors that can also cause foreign international expansion risk, like difference in cultural values and difference in political environment and likes. So it can also mean a business risk to PAYOCO because they would have to deal with the international expansion risks.
Okay. All right. Um, yes, I've gotten 3, but that was fast. So I have space for 2 more. Go ahead if you have another point.
Okay, can I go ahead?
Yes, please.
Okay, I spoke earlier, so maybe I should just wait. I just one of us wanted to talk.
Okay, all right. Next person.
So my audit risk is a small internal audit department. Two
Okay.
staff is not sufficient to monitor the controls of the entity because they have a turnover of 40 million and 1,500 employees. So there's a risk that the CFO may not give adequate attention to these two staff reporting to him directly, and the entity may be exposed to risk of fraud in the business if controls are not properly monitored, and thereby the company losing fund.
Fantastic. I think that's the most well-presented point I've heard. Thank you. Next person. I like the link of size, number of employees, revenue with the number of internal audit staff. I like the emphasis on fraud risk. And I like the emphasis on CFO not having time for them. I like the fact that you did not focus on independence because that's more of an audit risk, okay? And yeah, so that was a very good one. Any other person?
Contracts with Royal Co.
Okay. Go ahead, please. All right, we can't hear you. All right, can another person come on?
Hello.
Yes.
Yes. So contracts with the Royal Co. The contract was signed based on the award they received recently. That's the Gold Standard Accreditation Award. So it means a business risk if this award is being lost, if they don't renew the award another time for them. Looking at the standard, there are conditions that if they meet a certain criteria, they would continue to win the award. But if we look at the information, the key performance indicator, where they said they increased, the actual was 85, and then they are meeting 82. That can be an indicator if Falco is not careful, they might lose the Royal Co if they don't meet up with the standard or with the criteria, if they lose that award. So that's my own thought.
All right, another good point, another very good point. I mean, you clearly saw the trend there that is moving closer to 80%. I think what I would have just asked you to improve on is to give us an idea of how big the contract with Royal Co is. You know, the question says majority of the increase in their revenue came from a new customer, Royal Co. So you could have just referenced that 5.5% increase in revenue that we have there. Okay. I can see that the examiner has already done the year-on-year change for us. All right. Well done, guys. So in a nutshell, the first three people that spoke gave very good points as well. But I just got the feeling that they could have gone deeper with the implications of what they are saying. You know, it felt like they just gave me, okay, let me just highlight some points and just move on. That kind of stuff. Please mute your mic. Yeah. So then the other thing is, for this question, they put there 10 marks. Sorry, business risk, 10 marks. So since they use the word evaluate, Evaluate if it was audit risk and all of that. We know that's usually 3 marks, right? So, but we can definitely assume this will be 2 marks each, right? And then that is why our focus has been on 5 business risks. So someone talked about internal audit effectiveness. Okay, so I'll just highlight key points, all right? I don't intend to write too many things. So the person reflected on size. So revenue, number of employees. Remember that one of the factors that determine the need for internal audit are these 2 things: size of the company, number of employees. Okay, compared to 2 internal auditors. Then, so work done may be inadequate to uncover fraud and errors. And at the end of the day, so poor low management oversight through internal audit function. Okay, someone talked about the international expansion. So now, that lady mentioned some things that are quite critical, which is good. International expansion is good, diversification is good for the business, right? But it also comes with inherent business risks. Okay, so one that you can reflect on is management oversight and control. Higher risk of non-compliance. With local laws. Distraction of management's attention. Meaning current operations may suffer, right? Then lack of local knowledge. In the new area, in this case, farmland. Okay. So the problem with management, loss of management oversight and control, it can be like where you are, your main operations. So standardization may be an issue. Or quality of standards, may be lost. That's really the point there. And obviously, what all this means is that new venture may not be successful with all this risk. So new venture may be unsuccessful. Okay. Now, someone talked about the Royal co-revenue. I think that is good on its own. I think the main thing really is the accreditation, right? Is the accreditation. So what are the things you can reflect on as you talk about the accreditation? Linked to a significant new customer contract. That's Royal. And then you can say 5% increase in revenue. Okay. Then you can also link it to the fact that what's the condition they attached? So the target.
At least 80% of timber sold must be harvested according to the strict standard.
Okay. So strict standard required for harvesting seems to have been falling and now closer to the minimum benchmark, which is 80%. Then you reflect on the fact that current business practices of scale is questionable, right? So two things, the employee accidents or legal case by employees and the bribe, it's bribery, I think it's the payment they said they made. Okay, let's just call it incentive payment. Okay. So in light of this, you then say the accreditation may be threatened, right? And if lost, what would be the implication? Lost customer contracts, revenue, and cash flow. Okay. 4, industrial action. So someone talked about industrial action. I think for me, I would like to take the industrial action from the perspective of revenue and liquidity. Okay. So one of the things we can see is that the company's cash so what do we have? Cash is 4.5 million, prior year is 6.8. And cash levels have depleted due to inflation and all those things, right? So cash levels have depleted. By what percentage? What's the percentage?
There's 3.8.
Okay, so let's just say 34%. While I think we're also told about inventory, that it increased, and it was due to the industrial action. So what's the percentage increase in inventory? So if inventory processed cannot be shipped abroad or cannot be exported to customers abroad, what happens? Working capital will deteriorate. Okay? Because you are tying more cash down in inventory, is that not true? And cash balance continues to fall while you are not generating new cash. And what's the implication of that? The implication may be that you are not able to meet short-term obligations as they fall due. Then 30% of sales will be affected because 30% is the exports. And as somebody said, customers may look for alternative suppliers. Cancelled orders, etc. Then even you can talk about handling costs, or what we call storage costs, holding costs rather. Overall OPEX, okay? Number 5, we can talk about
Shay, can the quality of wood depreciate as well as Shay? Can the quality of wood too be affected? So we have poor quality remaining. So
That would be under audit risk.
No. That's what so yes, I agree with you. during the time this thing is at the port, we don't know where it is. Is it at the port or in their warehouse? If it's in their warehouse and it's taking too long for it to be processed for its intended use. So I'm not an expert in that area, but I know of other product lines where immediately you harvest or manufacture those items, you need to quickly process them. Sometimes some products have 1 week timeline, some 1 month, some 2 weeks. You need to quickly process them to be able to extract or reshape them or do what you want to do with them. So if it's taking too long, they may not be fit for that purpose anymore. Okay, so you can as well explain that. So number 5, and that would be, mean that they will lose the value of that inventory. Okay. So it can be both a business risk
Excuse
and
me.
an audit risk. Yes.
The cash depletion, I thought it was due to inflation because it's under the industrial action, and I did not understand why the point is under industrial action.
Yes, so it's there because when your cash is depleting, no matter what is causing it, that's a liquidity risk. Is that not true? What could have improved your liquidity is if you continue to sell to customers. So we are saying that cash has depleted due to other macroeconomic factors, but they are unable to sell to 30% of their customers due to industrial action, which is also piling down cash because cash is tied in inventory, okay? And they are unable to generate. All right. So finally, just talk about one more, the incentive payments, right? So for that one, pretty much straightforward. You can talk about the reputational risk that comes from that. If it is found out to be illegal, then thing on their potential IPO, some investors may just not want to subscribe to their shares, and also customers may not want to associate with a company engaging in unethical practices. So you may also think of impacts on government grants. Government may not want to fund the entity anymore. Okay? So those are possible implications of that. Now, obviously, there are other risks that you can also discuss. We've not talked about the legal exposure that they have, which is regarding the employees that have complained. Okay? So in respect of that, you can talk about the reputational issue. You can reflect on their corporate governance. You can reflect on the fact that, in fact, even for that one, they said there's a potential payment of 19 million. and the cash they have is just 4.5, and they are already at their borrowing limit. You see, so you can link all those things together. The quality of your point resides in your ability to link the information given to you in the scenario together with the point you want to give and your general business awareness. Okay, so that's really what they are looking for in business risk. You must state the risk and state the impact is likely to have on the business, the impact on the business. So it's quite similar to how we deal with audit risk as well. Just that for audit risk, we are stating the risk for the financial statement and the impact on the financial statement. All right, so let's move on to yes, so sorry, I was still talking about other things you could say. So 6, 7, you could also bring out a risk related to the borrowing limits. Because sometimes when you're at your borrowing limits, it may mean that you may not be able to explore new opportunities that show up. Okay? That may have impact on your competitiveness. And then when you're also at your limits, it may be because you're about to violate a covenant, or a limit will definitely mean that maybe you've said your borrowing should not be more than 50% of equity. Now, when you are at limits, there's a risk that you may violate a debt covenant, okay? And violation of debt covenants may result in the need to repay. And we obviously know that the company's cash flow situation is not the best, okay? So these are other things you can also still reflect on. I can also reflect on the economic situation. That's also a risk you can discuss. It's a business risk. Then you can also, so that's 8, 9, talk about the operational risk of this business, because it looks like the risk of accidents, death, injuries, and all those things is inherent in the business. And you would also get some marks if you reflect on that. Another mistake candidates make is that they sometimes try to discuss how to mitigate the risks. That has not been examined. Okay, the examiner did not ask for that. So don't go into risk mitigation. All right, any question on business risk? How to attempt it?
Yeah, my only question is I just want to ask that all the highlights of each of the points, what if we under exam condition you are not able to, you're just only able to highlight maybe 2 or 3 of those listed highlights? Would that be good for 2 points?
When you say highlight, what do you mean by highlight?
Under each of the highlighted the points you wrote. Now we have some about under each of them by 5, 6, 7 highlights like that to talk about. So I'm saying that in case maybe under exam condition you are just only able to bring up 3 of those things, or 4, or I don't know, but can one still get the 2 marks?
Yeah, you will still get the 2 marks if you explain what you are trying to say. Okay, so let's look at my industrial action. So if a candidate had just said so I've got how many things listed here? 6, right? So if a candidate had just said PIL earns 30% of its revenue from exports, which obviously goes through the ports, okay? Now, there's an industrial action, which means that inventory is being piled up and foreign customer demand is not met. The impact of this is that those customers may look to other suppliers and cancel existing orders. So that's one impact, right? And just thereby leading to loss of revenue and cash flow. You will get your marks. You'll get your full marks, right? But there are also other questions where the mark for business risk is larger than 10 marks, okay? Or it's more than these 2 marks, it could be 3 marks, okay? Or where you just need to have, so what I'm doing in the class now, for example, is just to give all the implications that you can possibly think of. There may even be more that I've not listed here, right? So even if a candidate does not talk about the linkage to cash flow specifically, or storage cost, or the other inventory issue, the other lead risk, you'll still get your marks as long as you reflected on the risk. In this case, loss of not being able to meet customer demand, and then the impact. So loss of those customers, loss of their contract, storage costs, and stuff like that. Okay. So it doesn't have to be everything, but just also remember those guys are smart. The examining team, they don't just want surface answers. So that's why they usually say up to 2 marks. So if what they've received is not very clear, they can't see the risk clearly articulated, they can't see the impact of the manifestation of that risk, then they will not give the full 2 marks. So it doesn't have to be a very lengthy sentence or paragraph. Just go straight to what you need to communicate. Okay? All right, so let's get through audit risk. So we said that we should come up with 6 audit risks. So tell me, what did you see? Remember background risk, background risk impact. Go ahead.
Okay. Share issue.
Okay. The gentleman, I think, is focused. Yeah, go ahead.
Okay, can I talk?
Yes. We're waiting for you.
Okay. So the title would be share issue, right? So the finance used to acquire the rainforest was through share issue, which amounted to $25 million. This is 4.5% of total assets, which is material. Okay. The share issue was to existing shareholders and new shareholders. And the issue to existing shareholders could be through rights issue, which will attract a premium. And the share issue to new shareholders would also be at a premium. Right. There is risk that the proceeds of the share issue has not been properly classified between share capital and share premium. Yes. And I don't know if I can add the fact that the rights issue is possible that some existing shareholders would not exercise their rights and maybe sell the rights to other people. I don't know how that will affect the accounting for the share issue. So that's what came to mind when I saw that.
All right. Thanks for that. I mean, though that risk is not something I'll put within significant risk, but it's okay to say it when you are what's the name, pressed for point. And I'm talking about the risk in respect of share premium, share capital, disaggregation. The one you talked about on rights issue is not an audit risk, okay? So we can take that out. All right, next person.
Okay,
I want to talk about the detection risk that may arise from the fact that they are auditing that this client is a first-time client, as well as the industry as well. It's the first time they are auditing a timber company. There's a risk of knowledge gap. The auditors may not be able to they may not have enough knowledge about the company as well as the industry to detect misstatements in the financial statements. Also, they may have to do extensive procedure because they may also, there's risks that they may not be able to detect errors from opening balances. So they may also have to audit opening balances from prior years audits. Yeah, thank you.
All right, thank you. Thanks for that. I think that's good. So the only addition I would have for you is, did you also notice that it's a new industry for the audit firm? So aside experience with the client because it's a first time audit, it also seems like this is the first timber, whatever company that they are doing. Okay, so you can also add that to your new client point. All right, next person, please.
Actually, so I want to talk about the small internal audit department. So this, okay, so the PELCO has a small internal audit department that is managed by or headed by the CFO. So this can be a sort of control risk for the auditor, because it shows that they have it shows that the company has weak internal control system, and also looking at the fact that they are looking at being listed in
We lost you. We lost her. Okay,
Please, can you hear me?
We can now hear you. You want to start again, please?
Okay, I'm sorry. So I'm talking about the small internal. So can you hear me?
I can hear you, but I said, can you start again? Because we lost majority of what you said.
Okay, I'm very sorry, my network. So I'm talking about the small internal audit department with 2 staff. So PELCO has a small internal audit department and with just 2 staff for the whole organization of over 100 staffs, which reports directly to the company's CFO. So this can be a sort of control risk for the auditor. And due to the fact that they are also looking at expanding, being listed in 2 years' time, and they don't yet have an audit committee. So this can mean weak internal control system. And so they also need to pay attention to this, especially when planning their audits.
All right, good point. Thank you. Next person.
Legal case.
Okay.
19 million is material to total assets at 3.4% and to PBT at 380%. The standard requires that provision is made when there is a present obligation as a result of past events of which there will be economic outflow of an amount that is reliably estimated. There's a risk that provision is not recognized as liability in the statement of financial position and expenses in the PL. So liability is understated, expenses understated. In fact, the business should be making a loss and not a profit.
Fantastic. Well presented. Good points. Okay. Maybe just had that uh, the risk is that the risk that it's probable, then they should provide. So as you said, all those conditions you mentioned, or if it is possible, then they should disclose a contingent liability. So it's usually one of three things: probable, possible, not relevant, or remote, right? So always look at your risk from the first two. If it's probable and can be reliably estimated, the risk is they've not provided, so profit is overstated, liability understated. Alternatively, if it is the case based on legal view or expert's view that it is only a possible obligation, right? Then the risk is that they have not provided adequate disclosure, or they've not disclosed the nature and financial effect of such contingent liability. Okay, so you can always think about it from those two perspectives. All right, next person. All right, before relative to size of the business, before we move on, I'm a bit interested in this internal audit issue. Okay, so as she said, she talked about size. Now, from an audit risk perspective, which obviously in this case is a control risk, as she said, their review, so inadequate review, or deterrent. So that's fraud risk again, because auditors are concerned about fraud risk. Then independence as well. It does not appear that they are independent here. So reporting to CFO, not just reporting to CFO, work and recommendation will be influenced or even determined by the CFO. You understand? So that's an issue. Then looking to lists in 2 years. So all this doesn't make sense in respect of that. So heightened control risk. Okay. Oh yeah, next point. Don't worry about me writing. Just be giving me your points.
Say the grant.
Hmm?
Can I say something? Okay, International Development Agency grants. This is material at 3.6 of the total asset. Grants are accounted for as deferred income when the purpose for which it is granted is yet to be used and written off over the period of expenditure as the conditions for the grants are satisfied. The grant is due to be received in September X5, so it should be accounted for as a deferred income at year end September X5, as relevant expenditure will commence in November. So, and then there is a risk that Mark York will have recognized half of the amount received as income in this year's financial statement. Sorry, I'm reading my answer script. So this is my own answer script from my mock. As planned on the
Okay.
basis that it will cover some of the management expenses in planning the international expansion, which is not a condition for the grant. And I said there's also the risk that PAYCO may lose the grant as the treatment of the employee may not be seen as an ethical business practice. So PBT will have been overstated and liability understated.
Yeah. Yeah,
That's all.
that's good. Um, yeah. Did you use the word deferred income anyway? Did you say they should
Yes, sir.
recognize it
At
as
the
a okay,
yes,
okay,
yeah, it should have been accounted for as deferred income. Yeah.
okay, all right, that's fine. That's just very fine. Okay. The legal case, how much is that figure? Is that the 19 million? How much is it again?
Yes.
Okay. And how much is the profit?
Six 6.5. So that's why it will have gone into a
Oh,
loss.
all right. Okay. So um the one you just talked about now is government grant. Okay. Yeah. So in respect of the grant, you started with materiality, which is good. Then you said the accounting treatment should be deferred liability and recognized as cost is incurred. No amount should be recognized as income for management time because this is not part of the conditions, right? Then the liability understated and profit overstated. That's if they do what the man is suggesting. Possible repayment. You can also talk about that. If probable, they need to make provision. But if an obligation to repay is possible, then they need to disclose. What could trigger possible repayment? What could trigger possible repayment?
When they fail to meet with the condition of the grants.
Good or what?
Or they may fail to.
A breach of covenant.
Okay. Actually, it's in respect of this scenario or the bribery issue. Bad publicity and all those things. Government may say, we are not, we don't want to associate with you or fund the operations again as you have, where we noticed that you bribed or you paid an illegal incentive payment to a government employee. Okay? It could even be on the basis of withdrawal of their accreditation as well, if it gets to that point. All right, I still need more audit risk. I need at least 2 more. Quickly, guys, quickly. But yes, I acknowledge that we are moving faster because I know that in those classes when we started looking at risks, by now maybe we are still discussing business risk. So, but now the points are coming smoother, better, easier. Obviously, exam is 1 week away. So that's good. So next point, what other risks do you see?
Shay, can I go again?
Yeah.
Still from my notes, yeah. Reduction in fair value of 70.5 million from the damage to the plantation. I said this is material at 12.8% of total assets and 1,084% of PBT. And this may not have been recognized as reported on the expert report as timber plantation grew to 500 as against prior year of 490. So there is a risk that both total asset and PBT may have been overstated.
If you are done, come back again, please,
I'm
with
not
everything is.
okay. I said this is material at 12, so the reduction of fair value of 70.5 from the storm damage, yeah. This is material at 12.8 of total assets and 1,084% of PBT. I'd use the two because it will have affected the two elements. This may not have been recognized as reported on the expert report. Remember in the note it said that the number they gave was before accounting for it. So it's possible they have not done it. And that's the risk that they have not done it. As the timber pension grew from 500 to 490, despite, and that's with the addition of 10 million extra. So there is a risk that both assets and PBT may have been overstated.
Okay. So wait. Let me go to that place. So they said key results, which form part of management commentary and comment. The financial information is before recognizing changes in the fair value of timber plantation caused by the recent storm, and also before accounting for the government grant. Okay, so you saw 550 in the current year and 545. Oh, sorry, 500 in current year and 490 in the previous year. So you said it increased by this. But meanwhile, that plantation thing, the storm, the report say based on the expert report, management has determined that the reduction in fair value of 70.5 million should be recognized in respect of this. Okay. Okay. So why do you say there's a risk that is not included in the expert's report? Is it not
So
the expert
there is
report that provided?
no, not in the expert report. There's a risk that they have not implemented it in the financials. So it's on the expert report, but they've not brought it into the books because they are still showing us 500 in the books.
Okay. 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 So the risk is that they will not recognize it. Okay. All right. All right. All right. All right. That's fine. That's fine. That's fine. Interestingly, it's pretty straightforward, and I think you captured the key things there. Started with materiality, how big it is vis-a-vis profit, and also maybe vis-a-vis total assets. Okay, so materiality, and then the accounting for biological assets is fair value through POL under AS 41, and that's what the company is doing. So the accounting policy is accurate. But what has happened is that this event, has led to a fall in the fair value of 70.5, which has not been recognized. Okay, so fair value loss of $70.5 million will be recognized in P&L. The risk is that management may not want to book this significant amount. And this is certainly going to be a key audit matter. Because even us, we need to, in fact, there is even a risk that expert valuation, that reminds me, Yemi, I think it's Adeyemi, right? Adeyemi, see, they said if you go to the requirement of the question, yeah, they said, note, in relation to the timber plantation asset, you are only required to consider audit relating changes in fair value. Any other relevant audit risk relating to be dealt with separately. Okay, relating to timber plantation assets. You are only required to. Okay, where did I see something about experts? Okay, I think it was in the question. They said they used an expert, right? An independent expert has been appointed by management to determine the extent of damage caused and effect, including determination of changes in fair value of standing tree. The expert report indicates have been completely destroyed. Okay. So yes, what I wanted to say is that there's a risk that experts might not have fully quantified the entire impact of this significant effect. Yes, so what I'm saying is this is management expert, okay? A management expert, though independent, as mentioned in the question, says 70 million. But we will, because of the significance of this thing, we will still consider the risk that what if that expert has not reflected on all possible issues that could arise from all possible losses that the entity is supposed to take note of. Do you understand? As part of this storm or destruction that happened. Okay. So if you look at sometimes what auditors do. So I'll give you an example. Say a company that has several investment properties, yeah, and something happened to the investment properties. Now, that company has their own independent expert that do valuation of their properties. Property is the largest item in their books, okay? Now, what auditors normally do as well, particularly even for very large firms, they have real estate valuation specialists in-house within the firm, okay? So they will send the report, send the event, send all the details of what happened to them. And those people too will now use their own independent assessment to confirm whether those things the independent expert of the client did was reasonable. So that's why we're still documenting that risk. That one, management may not want to recognize what we have seen, but there's another risk that even what the expert documented as a loss, there might have been one error or the other in terms of the adequacy. We don't know the expertise of the valuer, for example, okay, or the expert of the specialist that they've used. So that's something that is necessary that we consider. All right, any other risk? Okay, so at this point, I would just say orders. Go ahead.
So, oh, sorry.
Okay, so I want to talk about. So I want to talk about the accounting policy. I want to talk about the accounting policies. Though the technical experts confirmed that the accounting policies outlined, they are actually correct. The treatment of the standing timber, felled tree, and processed timber actually correct. But the treatment of IAS 41 is basically based on fair value, and as thus fair value is majorly gotten from estimates and can be subject to management bias. So there's a risk that the fair values have been overstated or understated. That's my thinking, sir.
All right. I like that point because you are paying attention to what is relevant, right? In the scenario. Obviously, that plantation, as we can see in the information given to us. Let me just quickly look at that. So this plantation is 500 million. Total asset is 550 million. So this is probably maybe more than 85% or 80% or 90% of their total asset. And it's entirely determined using fair value. And this is not level 1 fair value. It has to be level 3 or level 2, most likely level 3. Okay, so there will be a lot of inputs, assumptions, estimates that the experts or any valuer they're using would have used. And as such, is subject to an inherent risk that one or more assumptions, estimates, or inputs used may not be appropriate. Okay, so for example, for the investment property clients that I was just talking to you about, one of the things the real estate specialists within the firm, what they do is they will check all the rental information used, the yields used, because most times when you're valuing a property, you will look at what's the rental value over so number of years. and what discount rate. So they will check all those inputs. Do they make sense? Where have the experts made an adjustment? Does that adjustment, do they agree with it? And all those things, okay? So that's a huge inherent risk, and that's a very good point. All right, so that's it. So in fact, I will just
Sorry, Shay. Still on the
yeah.
number 6, is it possible for us to still reiterate how this adjustment will further erode the profit declared? So if they are still
Yes,
going to do this, yeah.
yes. You will discuss that with the point where the issue is coming from, whether it's the legal issue or the fair value issue. So under number 6 or under number 5, you can discuss the impact on the profit. So except you are talking about something like what I will call management bias, right? So we can see that they want to go for listing. We can see that a lot of bad things are happening. So we can see that they have new shareholders as well who will be expecting improved performance, right? So there's a heightened risk of creative accounting, earnings management, or fraudulent financial reporting, as the case may be. Okay, so that's that one. Then number 9, you can also talk about the inventory valuation. I'm surprised I didn't hear that, because I actually thought someone said it was an audit risk when someone mentioned it as a business risk initially. So inventory valuation, if you have customers that end up canceling their orders because you can't meet their import demands due to the industrial action, what happens? You may not be able to sell that timber to another customer, and you may have to, write it down to the lower of cost and net realizable value. You might have actually cut it to meet certain customer specification or designed it to meet certain customer specification. Okay, so if they are now canceling because it's not due to their fault and things like that, then it will affect the valuation of inventory. All right, thank you very much. So that's that point. Let's now move to the audit procedure. So again, I give you 5 minutes to quickly think through the procedures that you will carry out in respect of what did they ask us to audit again. Let's quickly go there. Design the audit procedures to be performed in relation to the changes in fair value of timber plantation caused by a recent storm. Oh, this is where I saw what I was saying. Your procedures should include those relating to evaluation of the experts appointed by management and work they have done. Please, there are some things I would like to hear. Clearly apply SSS, scope, structure, soft in answering this question. We need 6 valid procedures. Okay, so I'll give you 5 minutes to structure your point. All right, guys, let's talk. 5 minutes. So what do you have?
We try.
Yeah.
Okay. Obtain and review expert valuers reports to understand the reasonableness of expert inputs and fair value matrices.
Good. 1 mark. Thank you. Next person.
Conduct research or findings on the independent experts to determine their experience, competence, and expertise.
Very good. Good point. 1 mark. Next person.
Review experts' report to determine the extent and coverage of damage.
Review experts' reports to determine the extent and coverage of damage. No problem. That's still part of this number 1. So expert report review. This person said assumptions and inputs reasonableness. Then you say extent of damage. Okay, I see you. Experts, expertise, and qualification. E.g., is the person a member of professional body for that field and independent? So she said we should do an independent research. So that's good. Please, I'm not stating this point as procedures. I'm just highlighting what you're telling me. But I'm auditing each procedure as you are telling me to confirm whether it agrees with our agreed format. Go ahead.
Shay, I want to confirm their independence, but I don't know where I will get that confirmation from.
Don't say I want to. Just tell me the
No. I'm
procedure.
asking you. No, I'm just telling you that I don't know. You know about the source, so that's what I want to do. But I don't know the source. I don't know my source to use. So I'm hoping you help me to bring down one, balance that part for me. So I want to confirm their
Okay.
independence, but from what? How? I don't know.
Okay. Did you hear what the lady said? She already covered that one. Now she said conduct an independent research.
Independence. Okay, I see.
Independent
But
research. Confirm. Wait now.
sorry.
Conduct an independent research to confirm the expertise, qualification, and independence of the experts. Okay. I mean, I agree. I think she could have said e.g. Okay. So e.g. Membership of professional body or what's the name? Other clients that they provide services for, stuff like that. But yeah, that's still fine. The person will get the mark. What else? Guys, quickly. This one is cheap now.
The performance of the
physical
Wait.
inspection.
Yeah. That's good. I like something like this. No problem. I'm very good at controlling traffic. The gentleman, go first.
Obtain board minutes to verify the conclusions of discussion around valuers report.
I like that point. That's good. Okay. Next, Mary, go for it.
A reperformance of the calculation of the schedule of the cost assessment and estimate of the fair value measurement for arithmetical accuracy.
Hey, 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 my people are ready for this exam.
So much grammar.
In fact, the grammar is killing. In fact, even if it's wrong, that grammar alone is enough to keep one. Okay, okay. Now, interestingly, I recently worked on a company that has about 1.5 billion pounds of uh, uh, investments in properties and direct properties and indirectly through companies that have properties. Okay. So for their direct investments in properties, they gave what's the name? Valuers reports. Yeah. Now, a member of the team was trying to do recalculation from that expert's report, right? And workings to do accuracy. But he couldn't reconcile the figures. So he did aggregate recalculation just to see whether what he would get will be at least close to what the expert got in order to confirm whether it's below materiality level and just document that and put it on file. So he did that for some properties, which were fine, but one was significant different. So I now told him, okay, I'm not sure I can sign off this thing. Go and talk to our, what's the name, experts, in-house experts, real estate team, right? So when we now had a meeting with the real estate team, the guy now said, what we are doing is, how did he even describe it? He said, we are just dancing with figures, that we are starting a journey that has no end, because all those things that we are seeing in the experts work paper, there's a software that has considered a lot of metrics in order for them to arrive at those final values. So there's no way we can do any recalculation that will give anything. That if we get anything close to it, it's just luck. Do you understand? So sometimes recalculate, what am I trying to say? Sometimes recalculation may not make sense. What may make sense may be that thing that the gentleman Shedrack said, where he said we should arrive at our own estimate. Maybe what he should have added is using the auditor's expert, okay? We should arrive at our own estimate and compare it with what management has done. It's not all
So
the
that's my
time.
next point.
Okay. So it's not all the time you can do a recalculation of what an expert has done. Mary, do you get where I'm coming from?
Yes, I get it. But
Okay.
but for exam purpose, is it relevant?
I think because of the way you structured it, the examiner will give you marks. I think he will still give you marks, but I mean, if I'm the examiner, I will not, because I don't possibly see how you will do a recalculation. However, there's an exception. If you put there that the auditor's experts should also do a recalculation of what they have done, do you understand? Then that will be fine. So,
okay, thank
what
you.
am I trying to tell you guys? Remember that this is a specialist area. Don't get the core audit team to start doing things that are not within their core competence. If they have to rely on an expert, they mention the use of an auditor's expert's work. Do you get?
Okay, thank you. What about in the physical inspection too? Because I have this as one of my points that doing a physical inspection with an with an estimator to assess the level of damage, to have an understanding.
Very fantastic point. Okay. Yeah, so that's fine. Next point.
They have finished all the points now.
They
I want to
have not,
mention that
certainly not.
maybe
Wait,
you can
go
obtain
ahead.
and review the financial statement to ensure that this amount has been appropriately recognized.
Can we discuss with
Wait,
management concerning any insurance claim?
wait. Wait, so this gentleman said we should review the financial statement to confirm. Okay, you know what I would say? I would say perform a review of financial statements to confirm the amounts have been included and that the disclosure supporting the significant fall in fair value is adequate. You know, this is not just a fair value movement. In an ideal, if not that this thing is fair value through POL already, we would have called this an impairment. Do you understand? This is an impairment issue. And I'm even surprised I'm not hearing anybody using the word impairment. Whether it's by accident or you guys know, I don't know. Anytime something is already at fair value through POL, then you don't talk about impairment because it's already at fair value through POL. So you understand? But what am I trying to say? This is not just a normal revaluation that happens every year and changes in fair value went down that they took. This is due to an event, right? A very adverse event. So there should be disclosures in the financial statement suggesting, okay, it's not going to affect our going concern. This is the impact it has on us. This is how we are dealing with it. This is where we are now. So procedure to assess the adequacy of that disclosure. Okay, I hope you get that. Okay. Sorry, just one moment before you guys give me the next one. Independent estimate by an auditor expert. And also arithmetic accuracy. Okay. Then I think someone said something. Yeah, physical inspection. Then review of FS and disclosure notes. Yes, what else? Any other thing?
So obtain management okay.
Go ahead.
Obtain management representation letter stating that they have determined that the reduction in fair value should be recognized in the statement of financial position.
Okay, and that there are no other impacts that they are aware of which have not been considered. Okay? Yeah, that would be fine, given the significance of this area. Any other point?
I wrote down a review of the correspondence between the independent experts and the management to confirm any possible management influence in the work done.
Okay. Correspondence between. I'm not sure that is really necessary. Do you understand? Would I start asking for the letters, the mails they exchange? No. The expert is engaged by management to work for them. Okay? So this is not really a regulator or customer issue. Do you understand? So you can't start going into correspondence between them.
Okay.
Any other point?
We want to review insurance policy to see extent of coverage and if they've paid to date, to see if there is any coverage on the disaster.
Why? What will that do? How will that help you with changes in fair value?
So that so we won't be writing it off completely off the books if there is insurance on it, yes. So we'll be able to say that the assets still exist because we will be recouping it back. But if there's no insurance coverage on it, then we'll probably have to write everything off, possibly. Not sure.
Okay, I hear you, but that's wrong. Okay. Now,
Okay.
the only reason why, sorry, can you mute? The only reason why you will check insurance is just going concern impact or business impact. Okay. Just to be sure that the impact on the business will not be life-threatening. But from an accounting perspective, reimbursements from an insurer must be recognized separately from the underlying assets. Okay, so changes in fair value is what they've asked us to audit here. If the fair value has fallen significantly and you have insurance coverage to cover part of it, in your balance sheet, you will still write down that asset to its new fair value. Then if your insurance receivable is virtually certain, you can now recognize that as a separate receivable. Do you understand? So yeah, I'm not too sure I want to put insurance policy down there. But if you put it down there, it would just be for the sake of maybe going concern business impact, which one may argue that if you were to put that on file, that would be in a separate section and not under the fair value section. Okay.
Thank you.
All right. I think one last one that I think is very fundamental is meeting between, because this is significant risk, yeah, auditor experts and management experts. They need to meet to discuss what approach did they use, clarify certain things, challenge the work that they have done, you know, and confirm whether the methodology and all those things are reasonable, because you will not get everything you need from the report. Okay. All right. There may be other stuffs as well that are relevant, but I think putting this down gives you all the marks. Okay. I would want to take a break now. Let's go on a short break and come back by 4:30. And then after that, we take the ethical issues and move on to another question.
Sorry, Shay, just a quick question.
Yep.
So I saw that what we have done here, we have separated the